Hi, welcome to the Market Alert for Tuesday, the 23rd of January 2018. So yesterday the pound moving higher. We saw the selling initially, followed by some buying, more buying, closing above the 20-bar average. Bit of selling pressure coming in as the shorts get out, and then you see the market free to move higher. Some profit taking at the psychological line there, the red line. You see how the selling was there, and then the uncertainty, but the volume drops off, and then the market goes into its quiet mid-morning phase and pulls back until it's retested here. A bit of selling as the market comes back through here, because people will have had buy stop orders above the psychological level, and of course the market makers move it lower. That shakes out the weak holders. They test it, no more selling, and then they're free to move high, and you see the buying come in there again. Bit of profit taking, and then the market's free to move higher. And this bar here, as we go into the late afternoon, you can see is higher than the previous bar, but because it hasn't closed it's closed in the middle and not in the top third or lower third or quarters, and therefore is not highlighted. But you can see there you've got selling pressure in the market. And then here you can see the market test as well. We've got the increase in volume. Market then is free to move higher once more, and that is how the markets maintain this on the overnight. You can see we're stuck in a range, and again if you look carefully here, you'll see that the psychological levels here and the increase in volume is where profit taking has come into the market. Some selling here, some pogo stick type bar here where the volume is huge, some buying back, a bit more selling coming in, and then what we're doing now is seeing the selling come into the market, move the market lower. The market will test and no doubts then move back to the upside, which we see in the daily chart. You've got the just move these a bit. You can see there the market going through the 139.42. We're heading for the 140, which is a major psychological level as well, and that's why you're seeing this at this level. This is why I like to look at the bigger picture as opposed to going into the details. Sometimes it's better to actually look, stand back, have a look, and you can see exactly why we're getting resistance. So it's the 139.99 is the high for yesterday, and I'm just going to remove this, and I'm going to put on this one. You can see there you've got the 140, and that's got to drive through this in order to move higher. A bit of a tail off in the bigger picture volume, but nothing to worry about at this point. Certainly be interested in the market driving through the 76 and the 139.42 that we drew in yesterday as well. So onwards and upwards for the pound as well, so long as the dollar continues to move lower. And this is the dollar chart. I'll just move this out a bit so you can see what's going on. We're still in a bit of a sideways move here, but we're still below the 90.75 level at the moment. But given this, of course, we could get a bit of a dead cat bounce and a retracement, you know, sort of up, back, and then back down. So we'll see. 140 is going to be and could be an issue for the pound. News-wise, there was nothing out yesterday, and today this is all we've got as well. Nothing to shout about at all, but that makes it good for the market because it continued to move to the upside without any major news interrupting its all-time highs in the Dow, and the pound moving higher also. In the Dow, well, yesterday we just had the one signal, usual thing again, move the market lower initially. It's just moved this over a bit, so we've got selling coming through the psychological level. They tried to buy it back here, then the selling came in, and the same here, but eventually we just get to 230 and bingo, off we go. We get a bit of potential weakness because we've driven through a psychological level, but then we just pump it higher, a bit more profit taking here. Once the selling's out of the way, the market makers are free then just to mark the prices up. Bit of indecision here, which you can see in the Telegraph poll. I'm just going to move this over. Market comes down to a psychological level. We've got a test bar here, and then the buying comes back in for the start of the what would be normally the quieter part of the session. No news out, so the market's free to move higher. We know it's going higher. A bit of profit taking after this, and the same here. Market back above the 20 bar average, but a bit of selling there too. And then, as you'll see on the overnight, let's just keep pumping this market higher. You can see the buying there. There's profit taking in between, and in particular this one, a lot of selling pressure. But if the market fails to close 50% below any sort of selling pressure that you get, you can do that just by marking up here. Take 50% there. You can see the market carries on quite nicely to the upside. And overnight, yes, we're making new record highs, which you can see in the daily charts. Currently at 26,294. Again, we're through the 76% retracement like we had in the pound, and also the previous high that we had yesterday as well of 26,160, which you'll see there. So it's onwards and upwards. I don't see this stopping at all. It's the easiest trading out at the moment. You just wait for pullbacks and buy, and follow the market to the upside. It's so predictable, which is great. That's fine by me. I don't want a market that's quiet sideways giving false signals. It's just great. You can sort of buy, hold, and just watch the market unfold. 30,000 is on the cards. There's nothing to stop it at the moment. We've got the tax reform bill and also earnings season, and with the tax breaks that are being given, this allows the companies now also to buy back more of their stock or invest it in R&D, but they're going to buy back the stock, and this is going to move the market higher. No doubts about that. There are concerns around, but there have been concerns around since 2011, and none of it's still come to fruition as yet. It will do one day, but at the moment, certainly in the first quarter, it's the market moving to the upside, unless I say something of a geopolitical nature comes along. But fiscally, nothing to stop the market at the moment, even though the debt's rising, and there are concerns from some former central bankers and IMF bankers as well, reported yesterday in the Telegraph, but still hasn't stopped the market from moving higher at this point. Right, let's have a look at the implied volatility. So the implied actually up yesterday from 994 to 1050, given that the market went up as well, which is, again, we've switched back to that sort of divergence at the moment, and slightly a bit of a concern. You know, maybe there's some nervousness around because of how far the market's moved. Like I say, for me, this quarter the market's going to continue to move higher. I say unless something comes out of the blue, but otherwise there is I would say a bit of nervousness in the volatility there at the moment. Could do with this heading back south in order to just confirm the underlying move to the upside that we've got there. Right, let's have a quick look at Bitcoin before we conclude this morning's market alert. So Bitcoin lower. South Korea imposes stricter authentication for Bitcoin accounts, so they're not banning them anymore. All of a sudden we're going for more authentication, and yeah, so that's the weakness that's causing, or the news that's causing the weakness in Bitcoin. You can see it's broken through the lines that I drew in here, and now we're heading for the 76% retracement. The market has to hold at this level. If it doesn't, then you know, we could be heading a lot lower in this market. But at the moment, keep an eye on the 76% retracement here. Right, that will do it for this one. As ever, thanks for watching. I will see you in the next one, and if there's anything to report, I will also do that during the day as well. It's Tuesday, it could be slightly quiet, but then again, there was no news yesterday and the market just continued to plough ahead, so let's see how things unfold. Thanks again, see you in the next one.